the mathematics is inevitable failure. And that mathematics is working against you. And that doesn't matter if you have the most intelligent, the most sincere and earnest and honest president in the world. It's very little that he can do about that situation. It's endgame.
Did you know that silver could be the key to securing your financial future in 2024? Supply chain resilience and skyrocketing investments in technology are driving a bullish outlook for silver prices. And you don't want to miss out. In today's video, we'll uncover why experts believe silver is the best investment for 2024. Stay tuned to learn how you can protect your wealth and take advantage of this incredible opportunity.
1,480 run that occurred the back end of yesterday. I think we're going to get a bit of rejection here. We'll go into that technically now. But the dollar is the big part of that story, because we've also seen, for those that follow crypto, an enlivening of Bitcoin that was looking very, very flat. Gold has been far more consistent in its upward trajectory. We are seeing a little bit of lag still on silver, it must be pointed out. So this is, as I like to say, sort of God market against the anti-fiat, showing its strength. They are revitalizing, and you're getting a little bit of the same with Bitcoin being fairly prominent in the crypto market. But to me, this is the real sound money. Gold, big new high. Technically, I'll tell you what I think comes next, but this is pointing to the dollar. If I can just make a comment on the dollar and interject that into your question, Elijah, the key thing is the first quarter. I'm gonna paraphrase a little bit here, so it's not to the exactitude. But first quarter was all about the rest of the world slowing down, but the US is awesome. The labor market's still strong. Everything like that. The second quarter, a couple of times we pointed out that data tends to come in trends too. H2, which we kind of finished with the back end of June, we started to see a little bit of staling out of the numbers coming out of the States, where we both are based right now. And the last week and a half, we actually had a bad undershoot on core CPI. So that was recent. And just before that, we had an overshoot on the unemployment number as well. So what's actually coming to the fore is that, retail is getting hammered. The consumers are getting hammered. And this is a far more precarious time for the average man in the street, which is something we've been saying for quite some time. Data tends to lag. And so since we went into H2, we ended March and we started going April, May, June, we've started to see less awesome, everything is awesome stats. But the funny thing was that the dollar didn't really respond particularly to that. You continue to have the USD go up against the JPY. Everything was going up. It's a yen weakness trade, not a dollar strength trade, as we like to say. But suddenly, on the most recent data, we had a big ascending rising wedge. I'll show you that technically in a minute. We had this big spit down in the dollar, and that's suddenly a little bit of reality check on the strength of the dollar. And this is what's been driving gold higher. And it's even brought a more moribund crypto back to life, along with a few other things involving Trump, which I'm not sure you're ready to get into, but a couple of other drivers. So that's the more fullness of the answer. We've seen real weakness in the dollar coming in.
Supply chain resilience is more crucial than ever in 2024. With ongoing disruptions from geopolitical tensions, economic uncertainties, and extreme weather events, companies are shifting their focus from merely cutting costs to building robust, resilient supply chains. This shift is driving a significant increase in the demand for industrial metals like silver, essential for creating strong and sustainable supply chains. Organizations are now prioritizing risk resilience and sustainability, balancing these priorities with maintaining reasonable costs and business efficiency. The need for resilient supply chains means more investment in technologies that require silver, from advanced logistics solutions to robust disaster recovery systems. This heightened demand for silver as companies seek to secure their supply chains suggests a bullish trend for silver prices this year. If you want to understand how these changes can impact your investment strategy, stay tuned as we dive deeper into the factors driving this increased demand for silver in our next segments. And remember, if you're finding this information valuable, hit that subscribe button to stay updated with our latest insights.
I don't want to enrage with my own personal opinions, but what I will say is that, if you look at the outcomes of the events, and I always ask who benefits from the stage of events, the outcome is a very galvanizing of the right, which is quite likely in a well-counted, fairly counted election to lead to possibilities of a landslide victory. The other thing that's interesting, and that's one of the reasons why Bitcoin went up as well as gold, is that he's seen to be pro crypto. It's kind of wasn't always that way, and it's sort of morphed and getting framed a little bit that way as well. And also the possibility that conflicts like Ukraine might cease, might be better for some parts of the economy, people getting a little bit strong. But the strength in Trump is leading to strength in, for now, the possibility of sound money or money alternatives at the expense of the dollar. I don't agree 100% necessarily with that framing, but it's certainly galvanized the base of one side of the left versus right game. And one would expect that the possibilities or probabilities of a victory go up, assuming a sound election is conducted. That would be all I could possibly say. Also, as the business guy, that's also the tag he's got. We would expect the possible weakness in the dollar strength of stock market as well. So that shores up the debt market a little bit and takes some of the pressure off the interest rates environment. Again, I'm not sure it's 100% merited, but that appears to be the framing. So there's a difference between framing and reality, but that appears to be the expected framing by the financial media.
Persistent congestion in transportation and logistics infrastructure is a major issue in 2024, significantly impacting global supply chains. Container shortages, geopolitical tensions, and rising cyber threats are just a few of the challenges that have made it clear that disruptions are now a common occurrence rather than an exception. This ongoing turmoil in the logistics sector has pushed organizations to rethink their strategies, focusing more on proactive risk management rather than just reacting to problems as they arise. One of the most critical factors here is the container shortage, which has been exacerbated by the ripple effects of the COVID-19 pandemic. The shortage has caused significant delays and increased shipping costs, leading companies to seek alternative solutions. Geopolitical tensions, such as the trade war between the U.S. and China and conflicts in other regions, have further strained supply chains. These tensions not only disrupt trade routes, but also increase the risk of sudden and unpredictable changes in regulations, tariffs, and trade policies. Economic uncertainties add another layer of complexity. Fluctuations in currency values, inflation rates, and economic growth rates can all impact supply chain costs and reliability. Companies are now dealing with the possibility of sudden economic downturns, which can disrupt the flow of goods and materials. In response, many businesses are building more flexibility and resilience into their supply chains to mitigate these risks. Rising cyber threats pose a significant challenge as well. As supply chains become more digitalized, they become more vulnerable to cyber attacks. These attacks can lead to data breaches, operational disruptions, and even shutdowns of entire supply chain networks. Companies are investing heavily in cybersecurity measures to protect their supply chains from such threats, driving up the demand for technologies that incorporate silver due to its excellent conductive properties and its role in advanced electronic systems. Extreme weather events, which are becoming more frequent and severe due to climate change, also play a crucial role. Hurricanes, floods, wildfires, and other natural disasters can cause significant disruptions, delaying shipments and damaging infrastructure. This has prompted companies to develop more robust disaster recovery and business continuity plans, many of which rely on advanced technology and materials like silver to ensure quick recovery and minimal disruption. All these factors highlight the necessity for a resilient supply chain. Companies are now investing in technologies that enhance visibility and control over their logistics networks. For instance, digital platforms that provide real-time tracking and predictive analytics are becoming essential. These platforms often require components made from silver, further driving up the metal's demand. Moreover, companies are increasingly turning to warehouse automation and robotics to tackle labor shortages and improve efficiency. Robots used in warehouses for tasks such as inventory management, sorting, and packaging rely on silver for their electronic components. This trend towards automation is another driver of silver demand. In summary, the persistent congestion in transportation and logistics, coupled with the myriad of other challenges facing supply chains today, underscores the growing importance of resilience. This shift towards building more resilient supply chains is driving increased investment in technologies that require silver, suggesting a strong demand for the metal. If you find this topic insightful, make sure to subscribe to our channel for more detailed analyses, and stay tuned for the next segment, where we'll explore the impact of technological advancements on silver demand.
And first of all, I also want to put in a slight admission of being inaccurate on something that we've said technically. So when you're talking about charts in the future, you're doing probability-based assessments on what's likely to come. So the game is not never be wrong. You absolutely are going to be inaccurate and wrong. I prefer the phrase inaccurate as less ego investment in it, but for laymen, it's just being wrong. And I want to highlight it's what it tells you when you're wrong about the market. And I'll tell you, give you some color to that now and explain what we've saying. We've generally been exceedingly bullish this period. And on the macro, we've continued to reiterate doorstep of 3,000. However, on a shorter time frame, we did point out this structure here. We said, wow, that's kind of hard sells coming through on the gold. And then we got a weak bounce there. We did say, listen, I'm never going to change being gold invested, but there is a possibility that you might have a head and shoulder drawdown. And I threw $500 at just hedging against such an event. And what actually ended up happening, instead of the 2,300 level being a neckline for a small reversal to the downside on further dollar strength, because the dollar had been building most months this year. Again, the dollar index, the dollar has traded higher. Not violently, but consistently. There were just 2 months where it was very small little off markets. So we thought we could get a little bit of a blow off moment of dollar strength. You pull back. What ended up happening is that, completely contrary to my very rare, slightly bearish cautionary statement on gold, you absolutely rocketed away from that 2,300 support and went straight into the new high category. So that was a very easy and cheap little bit of insurance that I put on, and it was invalidated there on the right shoulder. I think I said left shoulder last time. Sorry, I mean right. So that's great news. The reversal never happened. I'd be a little more circumspect about people going in too aggressively right here. So this is a broadening structure with an ascending aspect to it. And the macro we could have a little bit of pause. So that was a great high, and it is a marginally higher high. We call these marginally higher highs. They often point to one of two things. So there is a new small shadow, but again, going back to my error of wrong, the one moment you bias to a possibility of bearish, you were proven wrong. This tells me it's broadly a strong market. And I want to also highlight this little fractal did very much the same thing on a lower time frame. You see that? And then you were trading off. You had a little bit of a candle there that could be a right shoulder. On a lower time frame, you went up and you came back down. And in the end, you just melted up. So sometimes markets, these crazy, slightly bearish technical structures, when you're in a really dominant market, they just turn into continuation anyway, even though they have some marginally higher highs. In a normal technical environment, I wouldn't be getting in.
Increased investment in supply chain technology is revolutionizing how businesses operate, and it's playing a significant role in boosting the demand for silver. The rise of warehouse automation, robotics, and digital platforms is not only optimizing logistics, but also enhancing the overall efficiency and resilience of supply chains. Let's dive into how these technological advancements are impacting the silver market. Warehouse automation has emerged as a game changer in supply chain management. Companies are increasingly adopting automated storage and retrieval systems, S/RS, autonomous mobile robots, hammers, and advanced conveyor systems to streamline operations. These technologies are essential for managing inventory improving order fulfillment speed, and reducing labor costs. Silver plays a crucial role in the electronics and components that power these automated systems. For example, sensors and control units in AMR require silver for their circuitry and connectivity, driving up the demand for this precious metal. Robotics is another area where silver's importance cannot be overstated. The use of robots in warehouses is becoming more widespread as companies face challenges in recruiting and retaining skilled workers. Robots can handle repetitive and physically demanding tasks with greater precision and consistency than human workers. The electronic components within these robots, such as motors, drives, and controllers, rely on silver for efficient performance. As the adoption of robotics in supply chains grows, so does the demand for silver. Digital platforms are transforming supply chain visibility and control. Real-time tracking systems, predictive analytics, and Internet of Things (IoT) devices are enabling businesses to monitor their supply chains more effectively. These platforms use sensors and communication devices that often incorporate silver due to its superior conductivity and reliability. Enhanced supply chain visibility helps companies anticipate disruptions and respond quickly, thereby minimizing potential losses and ensuring smooth operations. Furthermore, the investment in supply chain innovation has seen a significant uptick. According to the Supply Chain Trends and Insights Innovation Report published by Catena Solutions, organizations almost doubled their average spending on supply chain innovation in 2023 compared to the previous year. The report also found that 67% of CEO plan to increase investment in disruption detection and innovation processes. This surge in spending is driven by the need to address challenges such as labor shortages, rising shipping costs, and growing consumer demand for higher quality products. Another noteworthy development is the use of mobile robots and drones in supply chain operations. These intelligent robots can perform a variety of tasks, including intralogistics, site inspections, security, autonomous data collection, cleaning, and even transportation. The Gartner study on hype cycle for mobile robots and drones indicates that more than three-quarters of companies will have adopted some form of cyber-physical automation in warehouse operations by 2027. Silver is integral to the electronics and control systems of these robots, underscoring its growing demand. The benefits of these technological advancements are clear: increased productivity, better scalability, and improved adaptability to fluctuations in demand. For instance, DHL Supply Chain announced its plan to inaugurate 4 additional automated warehouses equipped with advanced technologies. These warehouses aim to enhance productivity and enable rapid scalability, all while maintaining flexibility to adapt to changing market conditions. The electronic components in these automated systems rely heavily on silver, highlighting the metal's critical role in modern supply chain technology. In 2024, the focus on warehouse automation and robotics is expected to intensify. Companies are keen to leverage these technologies to overcome labor shortages and meet the rising expectations of consumers. As a result, the demand for silver in supply chain technologies is set to increase, reflecting its importance in the modern logistics landscape. In conclusion, the technological advancements in supply chain management are driving a significant increase in the demand for silver. From warehouse automation and robotics to digital platforms and mobile robots, silver is an essential component that enables these technologies to function efficiently. If you're interested in learning more about how these trends are shaping the future of supply chains and silver demand, make sure to subscribe to our channel and stay tuned for our next segment, where we'll explore the trend of nearshoring and its implications for silver.
Yeah. So I trade leverage, long gold often. I rarely trade it short, and I'm a long-term investor. I save in gold. Right now, I would expect there is a possibility that you get a little bit of a coming down. I think the 2.5 is a very psychological level. You know, we've broken 1, we've broken 2. We've spoken about our target likely to take us to the 2.9s, the gateway to the 3K. In between that 2 and 3K, 2.5 is probably the most significant round number. And the problem is for central banks, that makes for ugly headlines, and they don't tend to like that too much. So I would expect there could be a spell of pushback over here, and maybe they will try put a bit of a spine back into the dollar for a spell, at least. And in the worst case scenario, you could come down to 2,300. Generally, technically, when we get an ascending broadening structure, the ascent comes from the splitter. So it is getting more volatile, so that it's going higher and lower. You start to get volatility. Generally, we normally bearish markets like that. But as I pointed out, you could have made that case over here, and in the end, it just tightened up and melted up. So it's quite uncertain, but I wouldn't get leverage long right now. And if you're a buyer, maybe you stack a bit of fiat and you can pick up a little bit more inside this range that I've described here with the broadening structure, so the double-lined area. 2-3, though, for now, is a very strong support, and it's now resisted once, twice, and 3 times. So it seems to be a great floor. So you might have to buy somewhere between the 2-3 and the 2-4 range. So getting anything in 2-300s might turn out well. Again, however, if we add a demand, there's this one wild card that I've got to keep leaving out here. Because as I say, this is not typically technically high confidence structure for me. If we were to have a major demand destroying event, you could still end up eventually with a head and shoulder just of greater scale. And even if you have a bad banking event, gold can trade off down in the price, the paper markets, in spite of it later recovering exceedingly well. So I want to remind everybody of the CV19 events. You recovered violently, but you did dip. And on silver, of course, it was worse. You went really far down. It's a higher beta version. And I'm concerned that silver has not really been following. So for now, this looks like a central bank institutional play, not so much the retail play. So you could end up, if we sold off to the 2-3, looking at another head and shoulder. So there's still a bit of doubt around this whole structure technically. I'm not a fan, and technically we're not a fan of marginally higher highs, because that points to continual distribution the minute you start hitting the headlines. So don't chase in leverage now, accumulate deeper in the range. Slight wild card on a bigger time frame, demand destroying event, you could then still have a reversal take place, but that would be in a very serious economic downturn type environment if we are to be having that. So a little bit of a nuanced answer. It's not so clear on a number of levels across time frames. So I hope that comes across. But as an investment long term, no change. Buy the big.
The rise of nearshoring is a significant trend that's reshaping supply chains and driving demand for silver. Nearshoring involves moving production closer to the company's headquarters or main markets, and it's being driven by several factors, including geopolitical tensions, the need for greater supply chain transparency, and the demand for faster delivery times. Let's explore how this trend is boosting the demand for silver. Geopolitical tensions have been a major catalyst for the nearshoring trend. Trade wars, such as the ongoing conflict between the United States and China, have created uncertainties and increased costs for companies that rely heavily on overseas production. In response, many businesses are relocating their manufacturing operations to countries that are geographically closer and politically stable. This shift reduces the risk of supply chain disruptions caused by geopolitical events and ensures a more reliable supply of goods. The need for greater supply chain transparency is another driving force behind nearshoring. Consumers today demand more information about the products they buy, including where they are made and how they are produced. Companies that can provide this transparency gain a competitive advantage. Nearshoring facilitates closer monitoring and control of the production process, allowing companies to ensure higher standards of quality and ethical practices. This transparency is often supported by advanced tracking and monitoring systems, which rely on silver-based components for their electronic and communication functions. Speed to market is crucial in today's fast-paced business environment. Nearshoring helps companies reduce lead times and respond more quickly to changes in consumer demand. By manufacturing goods closer to their primary markets, businesses can cut down on shipping times and costs. This agility is particularly important for industries like fashion, electronics, and automotive, where market trends can change rapidly. The technologies that enable these quick turnaround times, such as automated production lines and advanced logistics systems, incorporate silver due to its excellent conductivity and reliability. Several companies are already reaping the benefits of nearshoring. For instance, the UK-based fashion business David Nieper has brought its textile production back to the UK after experiencing significant supply chain disruptions. By investing in the local economy and nearshoring its production, David Nieper has not only reduced shipping costs and lead times, but also increased its control over the production process. This move underscores the growing importance of resilient and transparent supply chains. A broader trend towards regionalization and localization of supply chains is also evident. According to a report by the Capgemini Research Institute, almost 79% of consumer products and retail companies are diversifying their supplier base, and 71% are actively investing in regionalization and localization. Additionally, 83% of organizations are investing in friendshoring, a practice where supply chain networks focus on countries considered political and economic allies. This strategy reduces risk exposure and builds more resilient supply chains. Nearshoring has significant implications for the demand for silver. As companies set up new production facilities closer to their main markets, they invest in advanced manufacturing technologies that require silver. For example, smart manufacturing systems, which integrate EOT devices and real-time data analytics, use silver for their electronic components. The increased use of automation and robotics in nearshored production facilities further drives the demand for silver. The trend towards nearshoring is expected to accelerate in 2024 as more companies recognize the benefits of having a geographically closer and more controlled supply chain. This shift not only enhances supply chain resilience, but also supports the sustainable growth by reducing the carbon footprint associated with long-distance shipping. The technologies that enable these benefits, from automated production lines to advanced monitoring systems, rely heavily on silver, highlighting its crucial role in modern manufacturing.
Silver's slightly disappointing. And that's a concern, you see, because we see the gold silver ratio go up as a result of that. If you have a look at that, silver's been turned down. It's a very seminal level, this 30 level. We've highlighted it on bigger time frames before. So I'll just take you out. Legacy high previously on the Wall Street bets over there. And if I just take some of my artwork off, you'll see that this has been a choppy, and again, this just adds to the slightly cautionary aspect, the choppiness for silver. These selling wicks up top here, there, and there. So there's no confirmation with silver joining in with the same zeal as we had previously. So over here, we're on quite a big time frame. The months before, we had real confirmation out of silver there, there, and there. 3 great months joining in with gold, but a little bit more resistance. Maybe that's pops for everybody, but I'm pointing to these selling wicks, not being able to hold above, and close to that Wall Street bets high at the moment. So we could also have a bit of a technical pullback into range. So I wouldn't be a massive accumulator at these levels. Again, long-term, huge bull silver. Choose your buying points. Entries matter, more ounces, etc. Are a little bit not a technical entry point for both gold and silver right now. A little bit of choppiness and uncertainty.
Climate change and the need for compliance with environmental, social, and governance standards are becoming increasingly significant in shaping supply chain resilience. The increased frequency and severity of climate-related risks, such as extreme weather events, are causing further disruptions in global supply chains and are a critical factor in the rising costs and prices of goods. This situation underscores the urgent need for sustainable practices and technologies, many of which rely heavily on silver. The impact of climate change is felt across various sectors, particularly those that depend on specific geographical regions. For example, the semiconductor and rare earth metals industries are concentrated in areas prone to significant climate risks. Taiwan, a major hub for semiconductor manufacturing, has experienced extreme droughts that have severely affected chip production due to the vast amounts of water required in the manufacturing process. This single climate event can destabilize numerous industries that rely on semiconductors, highlighting the interconnected nature of global supply chains. Organizations must understand and embrace a resilient approach when collaborating with their suppliers to ensure the resilience of their supply networks. This involves investing in advanced technologies and infrastructure that can withstand and adapt to the impacts of climate change. Silver plays a crucial role in many of these technologies. For instance, it is an essential component in solar panels and wind turbines, which are pivotal for generating renewable energy. As the demand for renewable energy sources grows, so does the demand for silver. Investors and customers are increasingly expecting companies to adhere to ESG principles and sustainability standards. This expectation drives companies to ensure compliance not only within their operations, but also throughout their supplier networks. However, achieving these standards often requires significant upfront investments, posing a challenge for organizations working with constrained budgets. Despite these challenges, the benefits of sustainable practices include not only risk mitigation, but also unlocking new market opportunities and fostering innovation. One notable example is the automotive industry, which is rapidly transitioning towards electric vehicles (EVs). Silver is a critical material in the production of EV batteries and charging infrastructure. As more automotive companies commit to producing zero-emission vehicles, the demand for silver will continue to rise. Additionally, the push for cleaner energy solutions, such as hydrogen fuel cells and energy storage systems, also relies heavily on silver for their efficient operation. Moreover, the increased focus on compliance with ESG standards requires robust monitoring and reporting systems. These systems often utilize advanced sensors and communication devices that incorporate silver due to its superior electrical conductivity and durability. Real-time data collection and analysis enable companies to track their environmental impact, ensure compliance with regulations, and demonstrate their commitment to sustainability to stakeholders. In response to these challenges, companies are adopting more sustainable supply chain practices. This includes implementing circular economy principles, such as recycling and reusing materials, to minimize waste and reduce environmental impact. Silver, being highly recyclable, fits well into these principles. The recycling of electronic waste, for instance, allows companies to recover silver and other valuable materials, contributing to a more sustainable supply chain. Furthermore, extreme weather events, such as hurricanes, floods, and wildfires, can cause significant disruptions and damages to supply chain infrastructure. Companies are investing in resilient infrastructure that can withstand such events and ensure business continuity. This includes constructing buildings with higher resilience standards and using advanced materials that can endure extreme conditions. Silver's use in building technologies, such as energy-efficient windows and reflective coatings, helps enhance the resilience of supply chain facilities. Organizations are also leveraging advanced technologies like artificial intelligence, AI, and the Internet of Things, IoT, to improve supply chain visibility and agility. These technologies enable companies to monitor environmental conditions in real time, predict potential disruptions, and make data-driven decisions to mitigate risks. Silver's role in the electronics and communication systems that power these technologies is indispensable, further driving its demand.
Question, and I'll show you the key levels as they've popped for me prior, and we'll put those back on. You'll see we're very close to that 30.1 level. I think we could get under. There was a support here. So the wild card aside, a major demand destroying event, something that equates similarly to the events of March 2020, that's a deep potential. But you would look over here, for example, there was real technical support after that pullback over there. I would like to see that hold. So if I give you the value on that to answer the question, that's the low was 28. So it's a dip below the 30 mark. We're there or thereabouts now. We're just a bit above. I would like to see that 28 28.5 hold, the 28.5 handle. So we could churn around the 30 level. A good outcome for us, and I'll keep dropping it down timeframes. That's 3 days, that's 10 days. A really good outcome for us would be a coming down, but not too aggressively. We see a little bit of a box there that we've broken. And again, unfortunately, marginally higher highs, you could argue small head and shoulder. I'll draw that again on a lower time frame for some people. But that can point to a small correction. It's not end of the world stuff. So again, providing the wild card demand destroying event doesn't come, we could be in a structure like this that comes down somewhere here. And those tend to end very well. I want to highlight that's exactly what happened on gold on the 2000 mark before racing well beyond 2-3. So if you see what I've drawn, and the $30 silver is that number. The $30 silver was very much the $2,000 gold. And I'll show you that gold event that I'm referring. So a little bit of a dull period in here, providing we hold that 28.5. You could find accumulating in and around just around 29.25, somewhere in that box zone, a very good area where you'll get a bit of upward drift, and then we're ready to go again, which could be super exciting for the silver guys. So that tightening, good chance of that. So why do we keep drawing these patterns? Why these? Because these are continuation patterns. Continuation is the higher probability than reversal. This is what you've been getting so far. So in terms of, trends, this is what you've been getting so far for quite some time. I'll just show you, I'll go back to gold.
The heightened evolution of the cyber threat landscape is reshaping supply chain resilience and significantly increasing the demand for silver. As organizations and their third-party vendors become more interconnected and digitalized, the complexity of supply chains also grows, creating ideal targets for cybercriminals. This evolving threat landscape necessitates robust cybersecurity measures, many of which rely on silver-based technologies. Cyber attacks and data breaches are now among the greatest concerns for supply chain professionals. The BCI Supply Chain Resilience Report 2023 highlights that cyber threats are expected to be a major challenge over the next 5 years. The increased connectivity of supply chains, while enhancing efficiency and visibility, also exposes them to a higher risk of cyber attacks. These attacks can disrupt operations, lead to significant financial losses, and damage reputations. One of the key vulnerabilities in modern supply chains is the sharing of first-party data with numerous third parties. This complexity reduces traceability and transparency, making it easier for cybercriminals to exploit weaknesses. For instance, a breach in a single vendor's security can compromise the entire supply chain network. Therefore, it is crucial for organizations to ensure that their suppliers adhere to stringent cybersecurity protocols. Advanced cybersecurity measures often involve technologies that incorporate silver. Silver's superior conductive properties make it ideal for use in high-performance electronic components, which are essential for sophisticated cybersecurity systems. For example, silver is used in the production of advanced sensors and communication devices that enable real-time monitoring and threat detection. These technologies provide an early warning system, allowing organizations to respond quickly to potential cyber threats and mitigate their impact. Artificial intelligence, AI, and machine learning are increasingly being integrated into cybersecurity solutions to enhance threat detection and response capabilities. These technologies analyze vast amounts of data to identify patterns and predict potential cyber attacks. The electronic components required for these AI systems often rely on silver for their efficiency and reliability. By investing in AI-driven cybersecurity solutions, organizations can better protect their supply chains from evolving cyber threats. Collaborative partnerships with supply chain partners are essential for strengthening cybersecurity measures. Organizations must verify that their suppliers have robust cybersecurity protocols in place. This includes conducting regular audits, running joint cybersecurity exercises, and holding workshops to promote collaboration and ensure that all parties are prepared to respond to cyber threats. Such comprehensive risk management strategies help build a resilient supply chain network. A critical aspect of supply chain cybersecurity is promoting a strong cybersecurity culture within organizations. This involves ensuring that all employees use robust passwords, follow security protocols, and receive regular training on the latest cyber threats and defense mechanisms. System updates and penetration testing are also vital to maintain high security standards. The infrastructure supporting these cybersecurity practices, including servers and network devices, often utilizes silver due to its excellent conductive properties. The integration of Internet of Things, IoT, devices into supply chains has also increased the attack surface for cybercriminals. IoT devices, such as smart sensors and connected machinery, provide real-time data that enhances supply chain visibility and efficiency. However, these devices are also potential entry points for cyber attacks. Ensuring the security of IoT devices involves using high-quality electronic components that can withstand cyber threats, many of which contain silver. In response to these challenges, companies are adopting more sustainable supply chain practices. This includes implementing circular economy principles, such as recycling and reusing materials, to minimize waste and reduce environmental impact. Silver, being highly recyclable, fits well into these principles. The recycling of electronic waste, for instance, allows companies to recover silver and other valuable materials. Furthermore, extreme weather events, such as hurricanes, floods, and wildfires, can cause significant disruptions and damages to supply chain infrastructure. Companies are investing in resilient infrastructure that can withstand such events and ensure business continuity. This includes constructing buildings with higher resilience standards and using advanced materials that can endure extreme conditions. Silver is used in building technologies, such as energy-efficient windows and reflective coatings, helps enhance the resilience of supply chain facilities.
To show you why I think silver might follow and do what gold did, just to highlight that for you. It was also a very key level for gold. So we'll take those nice sketches away and just put you back here. I was highlighting it earlier. You see the blue line is your 2000 mark over there. Once we broke 2000, we called that a seminal key break out of the key pattern. As soon as we said that, of course, it came back. And then you got this kind of big bloated second impulse like that. Very low vol, super low a third, and that turned into an amazing little squeeze for gold, and you ran. So you sort of sat on the new step, if I can, or the shelf on your wall of the $2,000 mark, and that set up a very good leveraged bull market. So that's a great time for a leverage trade, providing you know what you're doing, you understand the laws of money management, you don't oversize, etc., etc. But that gave extreme profits to us, and that was an exceptional period for gold. Really fast profits and gains right the way up to this level. And actually, we're not much higher today after an extended time period. You know, that was halfway through April, and you know, we're a tiny bit higher. We did make a new high, but we are turning down. We're almost mid-July going August now. So that was a great run. And I think silver on the $30 could be looking to do that potentially. And that usually sees the $30 just run. So, you know, I mentioned the 28.5. You can see we were below 2000 there, and we actually dipped below 2000 again over there. So you're sort of like a ship with a keel in the water and slightly below water level at your lowest point. And I feel silver has that potential. So a bit more to happen. That's not absolute breakout, runaway markets, which could involve some ups and downs. So choose your entries. This is a choose your entries market, but definitely the only way to trade is long. And I put myself forward as an example of case. I just put $500 of insurance against that, and that money was gone for not trusting gold to hold its own on the 2-3 case. So the bias is long only in my trading environment, and choose your points, but this is not a current entry point. But the support levels that I've mentioned are. And I think silver could be the one next to give us a nice move, but it needs time.
Economic challenges and managing inflation have become critical issues for supply chains, significantly influencing the demand for silver. The past few years have seen unprecedented economic volatility, driven by the COVID-19 pandemic, geopolitical tensions, and inflationary pressures. Let's explore how these factors are shaping supply chain strategies and increasing the demand for silver. Inflation has significantly impacted supply chains across various industries. During the pandemic, there was a surge in demand for consumer products, which stretched the capacity of global supply chains. Lockdowns and restrictions disrupted logistics operations, leading to increased production and transportation costs. These disruptions were compounded by labor shortages and the need for stringent health measures, making supply chains more complex and costly to manage. The cost of raw materials has also risen sharply, adding to the inflationary pressures. For example, the prices of essential metals, including copper and aluminum, have surged due to supply constraints and increased demand. Silver, while also experiencing price increases, remains a crucial component for many technologies and industrial applications. Its unique properties make it indispensable for various uses, from electronics to renewable energy systems. One of the most significant inflationary impacts on supply chains is the increase in shipping costs. The ongoing geopolitical unrest, such as the conflict in the Red Sea, has caused shipping rates to spike dramatically. According to recent reports, some shipping lanes have seen rates increase by up to 40% due to the geopolitical situation. These heightened costs add to the overall expenses of managing supply chains, prompting companies to seek more efficient and resilient solutions. Managing these economic challenges requires companies to invest in technologies that enhance efficiency and reduce costs. Silver plays a critical role in these technologies. For instance, automation and robotics in warehouses help reduce labor costs and improve productivity. The electronic components in these automated systems often rely on silver for their conductivity and durability. By investing in such technologies, companies can mitigate the impact of inflation and maintain more stable operations. Predictive analytics and artificial intelligence, AI, are becoming essential tools for managing economic volatility. These technologies enable companies to anticipate changes in market conditions, optimize inventory levels, and streamline operations. The sensors and electronic devices that power these AI systems frequently use silver, further driving its demand. With real-time data and advanced analytics, businesses can make more informed decisions and respond quickly to economic challenges. The economic challenges also highlight the importance of having a diversified supplier base. Over-reliance on a single vendor can be risky, especially when faced with inflationary pressures and geopolitical disruptions. By diversifying their suppliers, companies can spread the risk and ensure a more stable supply of goods. This strategy often involves investing in new supply chain networks and technologies, many of which incorporate silver. Moreover, the increasing focus on sustainability and ESG compliance adds another layer of complexity. Sustainable practices often require significant upfront investments, but they can lead to long-term cost savings and improved resilience. For example, renewable energy systems, which rely heavily on silver, can help companies reduce their energy costs and mitigate the impact of rising fuel prices. By adopting sustainable technologies, businesses can enhance their supply chain resilience and reduce their vulnerability to economic fluctuations. The ongoing economic volatility has also led to increased demand for silver as a hedge against inflation. Investors and companies alike turn to silver as a safe haven asset during times of economic uncertainty. This increased demand from the investment sector adds upward pressure on silver prices, reflecting its dual role as both an industrial metal and a store of value. The consulting firm McKinsey, in their report, Navigating the New Normal, Operations Insights for 2024, highlighted the anticipated surge in rates across the entire supply chain, projected at 2.9% in 2024. This surge is attributed to the persistent impact of economic and geopolitical shifts, heightened cost pressures, and enduring disruptions within supply chains. As companies brace for these challenges, the importance of investing in resilient and efficient supply chain technologies, many of which depend on silver, becomes increasingly apparent.
People, my personal assessment is people place way too much store on elections and who's in charge. It's the situation. The situation has slowly built over multiple presidents over the last century to a super hyper indebted situation. In other words, the mathematics is inevitable failure, and that mathematics is working against you. And that doesn't matter if you have the most intelligent, the most sincere and earnest and honest president in the world. It's very little that he can do about that situation. It's end game. It's kind of, as I like to describe, that Stuka bomber pilot that's, flying at an incredibly steep angle into a mountain, and 5 seconds before impact you give the controls to the best pilot in the world. Well, physics doesn't see him pull out of that, no matter how hard he pulls. You're hitting the mountain, and you might be able to vary what spots you hit the mountain at, but that the outcome's very unlikely to be any different. It's a coming to an end. So most people get confused with inflation. They get sucked into all the other economic concepts. There is a debt devaluation event coming because there's too much of it around. That unfortunately points to interest rate spikes and control over interest rates being taken away from central banks. I keep reminding people, central banks only get to set interest rates as long as people are believing and buying debt. And the 40-year bull market ended in 2020. So I go back to reminding this, and people keep needing to hear it. That's why I'll keep saying it. And you don't take 40 years to unravel what took an escalator 40 years to get up to. It ends a lot faster and in a far more brutal manner, and that is the reset. And then it becomes a question of what assets do you hold. So we can talk technically about, what's likely to happen the next hour, the next day on gold, but gold preserves your assets and balance sheets like nothing else. And we've seen what gold did for the Japanese against the yen, against the euro, and it was always slightly less for the dollar. Well, now you're getting your dollar spell of weakness, and now you're making new highs on the dollar. There was a period where gold was making new highs against certain currencies, but not the dollar. Well, you've now got that box ticked. So gold's ultimate function cannot be taken away. And the gold is moving from west to east as well. And they know that even more and even better than us. And they are probably going to be the ones having a higher standard of living. And we're probably the ones that are going to be getting a lower standard of living, just generally through the sort of cultural Marxism and the diktats and the various slightly communist direction, unfortunately, the capitalist nations are going into, whilst the old communist nations are actually showing a bit of common business sense. That's not to glorify China. I'm delighted America is the major nation of the world, but unfortunately its trajectory has turned. It has a lot of God-given momentum from the last century, but it's actually floundered that to a large degree, and the momentum has turned. And the best insurance is you hold your balance sheet in your hand in the yellow metal. That's my best take. There is nothing else substitute. Remember, property is financially leveraged. You can go and buy out a ton of houses, but the price is determined by the market. And if everybody else has got 90% loan-to-value mortgages or 50% loan-to-mortgages, and that debt unwinds on an interest rate spike, your asset gets repriced by everybody else, not by you. And what you paid is an academic point of interest. Although it's not academic to you, it hurts. So that's what gold doesn't do to you. It saves you from the debt collapse, and we are in a debt-based.
In conclusion, the convergence of supply chain resilience and increased investment in technology in 2024 is creating a perfect storm for silver demand, suggesting a highly bullish outlook for its price. As we've explored, multiple factors are driving this trend, each contributing to the heightened need for silver. Firstly, the push for supply chain resilience amidst persistent congestion in transportation, geopolitical tensions, economic uncertainties, and rising cyber threats has made silver indispensable. Companies are shifting from a focus on cost-cutting to building robust, risk-resilient supply chains, and silver plays a crucial role in the technologies that support this transition. The investment in advanced supply chain technologies, including warehouse automation, robotics, and digital platforms, has surged. These innovations rely heavily on silver for their electronic components, driving up demand. The rise of nearshoring strategies, motivated by the need for faster delivery times, supply chain transparency, and reduced geopolitical risk exposure, further boosts silver consumption in local manufacturing processes. Global political unrest and economic challenges, such as inflation and heightened shipping costs, are compelling companies to adopt technologies that improve efficiency and resilience, many of which incorporate silver. Climate change and the necessity to comply with ESG standards are driving investments in sustainable technologies, including renewable energy systems and energy-efficient infrastructure, both heavily reliant on silver. The evolving cyber threat landscape is another critical factor. As organizations enhance their cybersecurity measures to protect complex supply chains, the demand for advanced technologies that incorporate silver increases. Economic volatility and inflation management require predictive analytics and AI systems, which again depend on silver for their components. The culmination of these factors points to a sustained and robust demand for silver in 2024 and beyond. As companies continue to invest in technologies that enhance supply chain resilience and sustainability, silver's importance will only grow. This increased demand suggests a bullish outlook for silver prices, making it a potentially lucrative investment for those looking to protect and grow their wealth. To summarize, the interconnected challenges of supply chain disruptions, technological advancements, geopolitical tensions, economic volatility, climate change, and cyber threats are all driving a significant increase in the demand for silver. As these trends continue to unfold, silver is poised to play an even more critical role in the global economy, supporting innovations and ensuring resilience across industries. Thank you for joining us in this comprehensive exploration of why silver is set to soar in 2024. If you found this analysis insightful, please subscribe to our channel for more in-depth discussions and updates on market trends. Remember, while silver presents a compelling investment opportunity, always consider your own financial situation and seek professional advice where necessary. As always, this content is for informational purposes and does not constitute financial or investment advice. Stay tuned for more insights and strategies to help you navigate the ever-changing financial landscape.
That's an excellent framing, Elijah. As I say, lots of things are managed theater, and you have very little control over that and what it is without being specific to any major events. The best thing is bringing it local to yourself. Work, live within your means, couple of safe, sound principles. Eliminate debt from your existence. Own outright the things you own. Protect yourself and your family, make suitable arrangements, get localized in terms of supply chain, which goes right down from electricity, water. But in terms of the financial element, without going, full prepper into the hills, which I still think is something people should be thinking about, but maybe not to go into such detail here. Gold will preserve your financial balance sheet. And that is what you can do. So save in gold. I love that phrase. Your gold is your savings, and it is your balance sheet. Grow the yellow nest egg. And you can see here a lot of people on the dollar milkshake theory and how dollar will be dominant. Well, gold's at a new high. Even though dollar's been firm most of the year, gold wins. That's the key story. Gold wins. In a debt devaluation, gold wins. We've had gold go up on increasing interest rates, and now you've had gold go up on the possibility of decreasing interest rates. It's heads I win, tails my enemy loses. It's a pretty good bet. You win on both sides, accumulate the precious metals. And even though I've kind of put out technically you could probably get a little bit cheaper, there's nothing wrong with dollar cost averaging, and you can forget about all I say technically. I still personally will always check a chart, and I'd rather accumulate the fiat and get a little bit more. But if you just have a random day and you dollar cost average and you collect an ounce a month or an ounce a quarter or 5 or 10 ounces of silver, whatever you choose to do, you're doing the right thing. But add gold because it moves first, and that gives you comfort. Add silver when you've already got some basis of gold. You can see how getting the silver part right is far more a timing issue, and it is shorter lived and more violent. Most people don't cope with the volatility. So I'm an advocate for both metals, but I think you should have both, and you start with gold. That's your foundation. That's your savings tool. I wouldn't say silver is a safer savings tool. It's more my multiplier to the gold run. It's a little bit of leverage gold, really, and it takes longer, and it's tiny bit harder to get right. But when it's right, it's damn right, and that we will have that day too. Don't get me wrong, but for some people, you would be frustrated by a lack of a new high today, and that's what breaks people's discipline. I want to keep you in the game. So get the easy ticking up that gold is providing, and then strap your turbo on with some silver ounces